Hey everybody, hope everyone's doing well and had a good day. This is the Emini recap for Tuesday, February 18th, 2025. And today was a really great day to talk about breakouts and second legs and 2 and 3-legged patterns. And let's back up a little bit. And here's last Friday. And I like to look at the context going into the day. And you can do that by looking at the prior trading day or the Pullbacks session. And here we have a trading range from last Friday. If we look at the Pullbacks session, here's basically the context going into the day. And there's a lot of sideways price action, and then we had this huge bear breakout bar closing below many bars to the left. This is a big enough surprise that it's probably going to get a second leg down. So it's good to know that going into the day, even though on the day only session chart we gapped up going into the day. And I don't know why. I think this is because of the holiday, the half day yesterday. There's a bar one there, but we can just ignore that. And so for today, gapping up if you look at the RTH chart, but good to know we have a big breakout bar for the bears on the Globex chart. So going into the day, we have a couple of trading range bars on the open, and bars 1 and 2, relatively small bodies, big tails, prominent tails, lots of overlap, and then bar 3, a strong bear breakout bar. The problem with bar 3 is the amount of overlap with the prior bars that it has. So it's breaking out below the prior 2 bars, but we're finding support at the moving average. And again, the amount of overlap, if you bought below bar 2, you're really not all that trapped on the close of bar 3. And you can see what happened if you did buy below bar 2. You had plenty of time to avoid a loss and exit at break even. You even may have made a profit. So bar 3, breakout bar, not ideal for the bears. In other words, there's not as much of a sense of urgency as there could be. Breakouts typically pull back, and I'm doing a 3-bar microchannel study, as some of you may know. And the thing about breakouts and price action is that it's fractal. So even though I'm doing a 3-bar microchannel study, that's my breakout signal that I'm focusing on. You could do a 1-bar breakout study. You could do breakout and follow through. You could have your own 3-bar microchannel study. And at the end of the day, I believe everybody is going to draw the same conclusions and roughly get the same numbers. So the numbers I want to share, what this reminded me of bar 3 and the pullback on bar 5, is that for my studies, there's an 88% chance that you get at least a 30% pullback after a 3-bar microchannel. And when I say 3-bar microchannel, because it's fractal, let's look at bar 3 on the 1-minute chart up to 9:45. Here's the close of the 9:45 bar. You can see the close of bar 3. And sure enough, 3-bar microchannel. So even though on the 5-minute chart, it's one breakout bar following a bull bar, there's a 3-bar microchannel within bar 3. And you can infer that on pretty much any bar any trend bar, there's probably a 3-bar micro channel for the bears on bar 10. There's probably a 3-bar micro channel on bar 11. And I'm not sure, but the point is it's fractal. So even though I'm studying one thing in particular, because I'm studying one thing and because it's fractal, I believe I'm basically getting a good grasp on everything. So I can infer that there's a 3-bar micro channel on a smaller time frame on bar 3, and so it should behave similarly. So bar 3, lots of overlap, 3-bar micro channel, pullback likely, but also second leg likely. When I have, for all of the samples, it doesn't matter the leg count, even leg 3 included, there's a 64% chance that a 3-bar micro channel gets a second leg after a pullback, meaning after a technical pullback, we go above the prior bar's high by at least one tick. For it to qualify as a second leg, we have to go one tick below the swing point, the extreme of the leg. So that would be below bar 4. There's a 64% chance of that, regardless of leg count. When you filter for leg count, if you're looking at leg 1s only, that number jumps to 69%. So after a breakout, what I'm trying to say is whenever you get a breakout, second leg likely, but also pullback likely. And let's just look at the sell-off down to bar 12 or 13. And if we're looking at simple legs, meaning we can imply that there's maybe a leg here, a pause, another leg, pullback. If we're looking at technical pullbacks only, leg 1 down to bar 4, pullback. Leg 2 down to bar 7, pullback. Leg 3, and it's actually down to bar 13. After 3 legs down in a trading range, and we can infer that this is a bear leg in a trading range because we have gaps closing, we have a lot of overlap, bars not closing, or I should say bars with prominent tails, bear bars. There are some bear bars closing near their lows, but a lot of bars with prominent tails below. This looks like a leg in a trading range more than a leg in a bear trend. And to me, after 3 legs down, and this is from a combination of studying Al Brooks and doing my own studies, what am I expecting after 3 legs in one direction, especially when they look like this? I'm expecting 10 bars and 2 legs sideways to up. I'm expecting a correction, a pullback, a deeper pullback, prolonged, possibly more than a minor reversal. So down here, around bar 13, it's 3 legs down, or it's at least some kind of bear channel. And even if you call it a tight bear channel, because you can call it a tight bear channel, the lines are close together, it's hard to make money. Stop order bull's not making money, or really hard to make money as a stop order bull especially. So you can call it a tight bear channel, but again, because of the strength of the channel with the lack of open gaps, the overlapping bars, the context to the left, again, this looks more like a bear leg in a trading range than a bear leg in a bear trend. And what do you expect after a bear leg in a trading range? You expect a bull leg in a trading range. And that goes along nicely with after 3 legs in one direction, you expect 10 bars and 2 legs sideways to up. So then we got the rally to 15, and that's a 3-bar bull micro channel, and that's a breakout. And there's actually a micro gap from the high of 13 to the low of 15. And after 3 legs down and a leg 1 breakout in a trading range, your expectation, or I should say my expectation after leg 1 in a trading range, is a deep pullback and a second leg. You typically get a deeper pullback when it's in a trading range, but still remember, after leg 1, I'm expecting a second leg about 70% of the time. And that's exactly what we got here today. We had a see. It's about a 65, 66% pullback here. So it's deeper than 50%. You know it's either a trading range or a broad bull channel if we're going higher, because strong bull trends do not pull back deeper than 50%. And so we got that. We got a 3-bar micro channel, a deep pullback, and a strong looking second leg on bar 17. But look at the follow through on 18. That is a disappointing follow through bar. Even though it's follow through, it's a bull bar. It's the minimum follow through. And after 2 legs up in a trading range, it's really dangerous to be buying after 2 legs up in a trading range, especially when the second leg looks especially strong. And when the follow through is disappointing and you're at resistance, you can get a deep pullback or even a reversal. So in this case, deep pullback, falling below 17. And we got a 3-bar micro channel to the downside, bar 23. So it's big up, big down, big up again on 24. Big confusion. On 23, 3-bar micro channel, so second leg likely, but pullback also likely. And if you're selling down here, you're selling in a buy zone. You're testing the low of a strong bull trend bar in a trading range. There's typically going to be buyers here, and there were. 24, reversing a lot of this breakout. So here, big down, big up, big confusion. Both sides expected to get second legs. So the bears tried for their second leg, but 24 was strong enough for its own second leg. So the bears failed. 25 became a pullback of the pullback, and the bulls ultimately got a second leg up. And you can say the second leg subdivided into 2 legs of its own, 26 and 28, 29. But again, here, this is sort of you can call it a nested leg 2, you can call it a wedge. What leg is bar 29? Some traders might see 3 legs up. Other traders might call it leg 2, leg 1, pullback, leg 2, and like I said here, leg 1, pullback, leg 2. What's interesting here, it's actually a micro channel from 23 to 29. It's I think maybe a 7-bar bull micro channel, but look at the micro channel. 4 of the bars are bear bars if you consider 29 a bear bar because it closed below its midpoint. And the context is bad. It's a late leg and lots of implied pullbacks along the way. Breakout, pause, another breakout attempt, another reversal attempt, another breakout, bad follow through. So even though it's a micro channel for the bulls, it's really not ideal. It's bad context. And then we got a reversal and follow through, bar 30. So what we've had so far is 3 legs down, reversal, 1, pullback, 2, pullback, 3 legs up, reversal. Now, deep pullback, trendline break, but what is the expectation after leg 1 in a trading range? It's a deep pullback before a delayed second leg. Here's the deep pullback. It actually went beyond 100%. If you consider the breakout from the 21 high to the 23 low, a 100% pullback is a test of the 21 high. So this one maybe was 105, 110%. But the bears did ultimately get their second leg. And then here, down to 31, bear breakout, pullback, second leg down to bar 35. 2 legs down, but now nested leg 2. I apologize for the background noise. Leg 1, deep pullback, leg 2, leg 1, pullback, leg 2, and this one even subdivided into 1, pullback, 2. And even as crazy as it sounds, even in here, leg 1, pullback, leg 2. So more of a buy zone. We're at support, and a lot of different ways to view this as leg 2. And we know that second legs in trading ranges often fail and they'll reverse a lot of the time. So that's what we got here. Now we can count the legs going up to bar 43. Tight bull channel, but look to the left. We know it's within a trading range, so expecting resistance. What's one obvious resistance point or price? The bar 29 low, because bar 30, big breakout bar, trapping traders below 29. There's a gap between the low of 29 and the high of bar 32. So you can draw a line there, and you can see exactly where the market tested. Now this one was also two legs up if you count spike breaks. Leg 1 to 39, we fell below 39, pull back, and then leg 2 up to 43, so two legs up to resistance. Some traders, maybe call it a truncated wedge, 21, 29, and the third push, 43, not exceeding the high of 29, the second leg. So it really isn't a great wedge shape. Maybe you call it a head and shoulders top. Regardless, it's a late leg at resistance. And then if you want to count implied pullbacks, we pulled back on 37, paused on 39, paused on 42. So 43, realistically, is maybe a fourth leg up. If you look at a smaller time frame, this tight bull channel, although it may be tight, maybe we'll look at it 105 on the 1 minute chart. Here's that bull channel, but you can see more clearly here we're dealing with a late leg at resistance, possibly the top of a trading range over here, retesting these prices, big bear breakout, follow through. Remember, bull channel means bear flag. And then I thought 44 was a decent swing trade with the context. If you think about the Globex 15-minute chart, or even if you consider the breakout down to 13 as leg 1, maybe leg 1 for the bears, complex pullback, 2 or 3 legs sideways, and then this could be the start of a bigger second leg down, 1, pullback, 2. 30 might have been the start of it, but the follow-through was not ideal. Bad follow-through, 31, 32, big tail, 33, reversal bar. So I think 30 was also reasonable to sell, but also 44. Another breakout here, strong bear breakout. And this might be a leg count reset. It's really confusing in trading ranges, and I'm still working on it myself as far as when to reset the leg count. But one thing I'm thinking about is when there's a trend line break, a clear trend line break, like here, here's a bear trend on a smaller time frame, this bear leg, and obviously the bulls broke that trend line. And because of that, this might reset the leg count the next time the bears get a breakout. Because in here, the trend line breaks were less meaningful. Where's the break of a significant trend line? It really didn't occur until bar 15 or 14, around here. Then we finally broke it, and then maybe the leg count gets reset here. Leg 1, deep pullback. Leg 2, obviously in a trading range here. So the market cycle, we're in a trading range, breakout mode. Bear leg, trend line break, new bear breakout. So possible leg 1 reset. Or again, you can look at it as a big start of the big leg 2, 1, pullback, 2. Tight bear channel down to 51, even though it's 2 legs down. Where's the buying pressure? There's one bull bar, but it's a doji, and it's basically maybe a 1-tick body in a really tight channel. The bulls need to do more. They need to break the trend line. 52, good bar, but 53, bad follow through. The bulls never did enough here. There was not a credible stop order buy. As far as buying above 52, it's a lot of selling pressure. It's a tight channel. And compare the strength of this tight channel down to 51 to the sell-off down to bar 13. Again, there wasn't a great stop order buy 13, not a great stop order signal bar, but the context made sense more than buying here on 52, even though the signal bar here on 52 is stronger than 13. And then 56, huge bear bar. Whenever there's a huge bear bar or huge trend bar in either direction on what has been a trading range day, I like to think of those as emotional bars. I learned that from Brad. An emotional bar is a bar. It's one of those bars where if you stepped away for a few minutes, maybe you went to the bathroom, you come back, this is what the chart looked like when you left, and then all of a sudden, there's this huge bear bar. And Al talks about this. I forget if it's in the course or the book, one of the books, whenever it is. He says, whenever there's a big trend bar and you feel desperate to get into the market, but there's trading range price action, you don't want to take the trade because the market's trying to trap you. Whenever there's a lot of trading range price action, maybe you're distracted, you're on the phone or whatever it is, and this huge bar comes, you've lost touch with the market. It's trying to trap you into doing the wrong thing. Remember, second legs in trading ranges are common traps. Maybe leg 1 down to 51, pullback, second leg trap, 56. Strong looking second leg, but could simply be a vacuum test of support. And what's the support? There's some sort of measured move in here. Maybe it's a measured move of the bear breakout here. Whatever it is, the market is racing to support. And it's great. There's a big bear bar, but why is there a huge tail on 56? That's a warning that there's something wrong with this bear breakout. Not to mention context, the fact that it's leg 2, the fact that it's surprisingly strong. But how strong is it when there's this much buying into the close of the bar? So let's wait for follow through, and then there's your follow through, 57. So it's really something not quite right with this bear breakout. 57 is disappointing for traders who sold 56. It's bad follow through, and if you're selling low on a trading range day, you really need good follow through. You need momentum, and if you don't get it, traders will bail out of the trade. Another way to look at it, broad bear channel, breakout of the trend channel line, but no follow through. Trying again, low 1, but then deeper pullback, and possible reversal, 59. Big down, big up, 56, probably exhaustion, probably going at least a little bit higher because 59 was a strong enough breakout for a second leg. Breakout, two-legged pullback, second leg, and then here, tight trading range. But here, the rally from 56 to 65 or 66 may have been tight enough to be one leg on a higher time frame. So bull breakout, tight trading range. We have trapped traders below, a couple of open gaps. There's a gap from the high of 58 to the low of 62. Another gap here. And these gaps represent trapped traders. If you sold above a bear bar, 58, trapped on 59, you never got back to your original entry price. These trapped traders, I've explained this before, I think it's worth mentioning in probably every video. This is the dynamic that is responsible for creating second legs, and it's so important to understand this. Why do breakouts lead to second legs? Because breakouts trap traders. If you're a trader who sold above 58, doesn't matter for any reason, or you're short, maybe you sold up here, and you're holding short down here, then you get bar 59. 59 is a surprise It's a huge bull reversal bar, almost retracing the entire bar 56. And remember here, the gap, if you sold above 58, you're trapped on the close of 59. And you're hoping the market pulls back to your entry price so that you can exit at break even and avoid a loss. Other traders will scale in, and there's ways to avoid a loss if you sold here and then you sell more above a bar, like the high one on 61. You sell here, sell more here. The market tested your average price. So some bears were able to break even on the entire trade, but other traders forced to exit their shorts with a loss. Then you have the bulls who didn't buy. 59, remember, 59 is a big surprise. It's this huge bar, and traders didn't necessarily buy down here, maybe waiting for a more clear second reversal, and then we get 59. So bulls are trapped out of a winning position, and they're hoping for any pullback to buy at a discount, expecting the bears are going to be trapped into a losing trade. They're going to have to buy back shorts. If the bears are buying and the bulls are always buying, we're going to have to go higher to find traders willing to sell. So the bulls are also buying, contributing to the buying pressure, and that contributes to the fuel that provides a second leg. And the same dynamic could be happening here. Remember, open gap here as well. So gap here, another gap here. And this breakout from 59 to 66 might be tight enough that, if we looked at a 15-minute chart, it's actually more clear here. You can see the 15-minute chart. Bull breakout, pullback, and then possibly a second leg up, which we ended up getting here at the end of the day. So you can see here on the 15-minute chart, the top right of my screen, bull breakout, shallow pullback, weak reversal attempt by the bears, and then a give up bar, another breakout. But here, this is another second leg trap. Leg one, pullback, very strong second leg, but getting bad follow through. We're testing a new high on a pretty much horizontal trading range day. So that's going to do it for today's video. Thanks everybody for watching, and I hope everyone has a good night.